Chris Capri, secondskyforex.com. So while trading is done for the year, I'm doing a lot of writing in my book right now, trying to spend a lot of time getting a lot of work done on that. But I had a lot of questions from some traders in my course, the ProForex course, who were asking questions about the euro dollar, how to get into the trend, or the down move that was in, which was clearly a very strong trend that we were in here, dropping from 151 down to currently 142.73. And so one of the questions I kept getting on it was how to get into it. And so if you remember from our channel videos, the euro dollar was in a very clear structured channel for quite a long time. And so doing our channel work, we draw the other boundary there. And we don't necessarily, this is actually not a channel focused on lessons. It's actually focused on how to get into a trending move like this when it's just running and running and running. But the reason why I'm bringing up the channel is that it broke this structure and it opened, retested it, and started to slam off after that with this big candle here. And so what I want to focus on is how you can get into this with a very simple price action technique. So it's called the inside bar break technique. And so this, for those of you who don't know what an inside bar is where the entire candle, body and the wicks, is inside the previous candle. All the price action is inside that. Now there are many reasons for the formations of inside bars, but generally when they happen during trending environments, they are kind of the pause before the market just continues on. We had one here, market continued on. We had one here, market had aggressive day of selling. We had one here, market had another aggressive day of selling. And so one of the basic techniques for trading inside bars, and this is a very common technique out there, and a very important price action formation to see. Inside bars only happen about 10% of the total bars over time. Our analytics actually have tested between about 10 and 14-15% of all bars are inside bars. So they don't happen oftentimes, but when they do, they can become high probability trades. Now, not all inside bars are created equal. You could have an inside bar in a non-trending environment, like this one here is an inside bar, this one, and you wouldn't want to necessarily trade the break of this high because you're running into all this resistance. However, in a trending environment, it's a lot easier because the direction has been established. And so the pause of the move on this one here, we had a stop here after some aggressive selling, inside bar, so you can do a simple sell on break here. And then look what happens again. After a big strong move, we have a pause. Here's the previous low. So we do another sell on break, and again. And then the market has another pause right here with an inside bar. This one was actually probably one of the best signals out of all of them. Why is that? Because it was not only a candle in the direction of the trend, but if you look at this candle right over here, and we're going to zoom in, this candle tried to penetrate upwards but was completely rejected, and that rejection was confirmed by this wick. So we could do another sell on stop here, and boom, thing drops, and just continued on with the trend. So now this is a very basic way to trade inside bars. Some of the key elements is that you have to be able to identify the trend. You obviously want to trade in the direction of that. There are many ways to optimize those bars as well to qualify them to further improve the signal of that going in that direction. But if you can recognize this simple price action technique, you can create a trading opportunity when you find them in the right environment. We actually have a proprietary analyzer program on it that actually has analyzed every single pair for the last 10 plus years on all inside bars. What's the average break based on any time frame, regardless of what direction the candle was, previous candle, all of that. These analytics and these kinds of data are only available to ProForex course members. If you're interested in getting access to this proprietary quantitative data, how to trade these strategies, how to learn to trade these on a very advanced way, then sign up for the ProForex course. So that's pretty much it. It's holiday time here, and so I'll be focusing the rest of my time writing the book and working with course attendees. But if you have any questions, feel free to email me, info@secondskies.com, or you can always check out our website, secondskiesforex.com. Until then, this will be the last video probably for 2009. So I want to bid you all adieu. It's been a great trading year. It's been great having you all along. So keep coming back. We're always doing new videos. But I wish you all a very healthy and happy holiday season here. Not just during the holiday season. Wherever you go, whatever you do, I want to wish you, just always the best. So I look forward to having an excellent trading year in 2010. Expect it to be better and better, and I look forward to be working with you then. Oh yeah, and if you have any questions about our ProForex course, check it out, secondskiesforex.com. We still have a few seats left for December with the $50 discount that only goes till the end of this week. And so that's pretty much it. I bid you all adieu. Happy holidays, and I will see you in 2010. Take care, everyone.